Hey everyone, welcome back to the channel. If you're looking for incredible stock stories, you definitely come to the right place today. We're diving deep into a company that's been on an absolute financial roller coaster, sparking both massive excitement and some serious head scratching. Get ready to hear about a stock that's exploded, bold new leaders stepping in, and a company trying to totally reinvent itself in the housing market. This company is Opendoor, and its journey this year has been nothing short of wild. Its stock price has seen an astounding rally, jumping around 470% year to date. But here's the kicker. Most of that action has happened in just the last few months, with the stock soaring over 1,500% in that short period alone. It's been a ride that has caught the attention of practically everyone watching the market. Some folks are even calling Opendoor a cult stock, putting it in the same league as companies like Tesla and Palantir. These investors believe Opendoor has the potential for its value to grow many times over the long haul. Think about it. Tesla has a total value of around $1.2 trillion, and Palantir is over $400 billion. Opendoor, on the other hand, has a total value of about $7 billion. That's a huge difference, but it shows the kind of massive growth potential some investors are seeing in this company. These are the kinds of stocks where everyday people often see the potential before the big investment firms do. Unlike meme stocks that might be a flash in the pan with no real business, supporters believe Opendoor has a differentiated business model with long-term success potential. The recent explosion in Opendoor stock isn't just random luck. It follows a huge shakeup in leadership that has everyone buzzing. The company just brought in a brand new CEO, Nejatian, who used to be a top executive at Shopify. And get this, two of the original co-founders, Keith Rabois and Eric Wu, are back on the board of directors, with Rabois now stepping in as chairman. This return to founder mode has definitely sparked investor optimism. This new team is coming in with some big promises, particularly a heavy focus on artificial intelligence to make buying and selling homes faster, simpler, and more predictable. They've even secured an extra $40 million in funding to help push these changes forward and strengthen the company's financial position. It's a clear signal that things are about to get very different at Opendoor, with management describing the next phase as software first. But this dramatic comeback wasn't entirely planned from within. It was partly forced by a loud and direct shareholder campaign. A hedge fund manager named Eric Jackson, who's been called the architect of Opendoor's initial massive rally, really pushed for change. He was relentless, even saying he felt he had to hit them between the eyes and just keep hitting them until they changed to get results. This kind of activist pressure definitely played a role in the previous CEO stepping down and the new leadership stepping up. The new chairman, Keith Rabois, isn't holding back with his opinions. He publicly called the company bloated, stating his intention to drastically reduce the workforce. He believes that out of the company's approximately 1,400 employees, only about 200 are truly necessary. That's a radical idea, right? He even criticized the company's remote work culture, saying it broke their core principles of innovation and in-person collaboration, and he wants to restore those roots. This shift to in-person work might also lead to voluntary employee departures. He sees a big problem with the company being too cautious and more interested in playing it safe than in creating value. He wants the new leadership to be much more action-oriented and ready to take a big swing. It's worth remembering, though, that the company has taken big risks before. In its early days, it bought so many houses right before the housing market dropped, which almost sank the company. But Rabois and the new CEO believe the opportunity to become the Amazon of housing is still wide open. The new CEO also has experience with crypto, so that could be another area they explore, alongside a heavy emphasis on AI. Despite all this buzz and ambition, Opendoor hasn't been a consistent moneymaker. The company has faced significant losses and tough housing market conditions like high mortgage rates and not enough houses for sale. The business of buying and selling homes with technology, often called iBuying, needs a lot of capital and consistent sales to succeed. Even major players like Zillow and Redfin decided to exit the iBuying business, finding it too difficult and prone to large losses. In its recent results for the second quarter, Opendoor did show some signs of improvement. Its revenue hit around $1.6 billion, and it actually reported positive adjusted earnings of about $23 million. This marked its first quarter of positive adjusted earnings since 2022. However, the company still had a net loss of around $29 million based on standard accounting rules. They also noted that agent-led distribution efforts are helping to expand seller reach and reduce the need for huge amounts of capital. The road ahead still looks quite bumpy. For the third quarter, the company expects revenue to be between $800 and $875 million, but with adjusted earnings potentially turning negative again, showing a loss of around $21 to $28 million. This tells us that consistent profitability is still a major challenge in this volatile housing market. Home purchases and inventory also fell year over year, showing a cautious approach. The stock has been incredibly volatile, with many large price swings over the last year. Even with the exciting new leadership and cash injection, some financial analysts are still cautious. They point to the high valuation of the company, with a total value of about $7 billion and making about $5.2 billion in revenue over the last year. It trades at roughly 1.5 times sales. This is considered high given the company's revenue growth trajectory and ongoing risks. The average target price from these analysts is around $1, signaling a moderate sell recommendation. This tells us that while there's a lot of hope, there are also real concerns about the company's ability to deliver consistent profits. The story of Opendoor is also a powerful one about everyday investors. This stock has become a favorite among retail investors, those who trade based on online communities and social media buzz. They were the ones who often saw the potential before big institutions did. This kind of community support, especially after events like the GameStop rally, is pretty unique. Some investors have shared incredible personal stories. One person wrote to Eric Jackson saying they used their Opendoor gains to pay off student debt or credit card debt. Another person, facing a tough personal situation, said their investment in Opendoor helped turn around their financial life, preventing them from making a tragic decision. These aren't just numbers. They're real people whose lives are being impacted by the stock's wild ride, highlighting the gravity of market influence. But here's the lesson for everyone. Chasing these kinds of shooting star stocks can be incredibly risky. While some see Opendoor as a potential game changer in real estate, others are warning that its surge isn't always tied to solid business improvements. The stock is very volatile, meaning its price can swing wildly. It's still trading far below its all-time high of nearly $36 per share back in 2021. The new CEO just officially started, and with the Federal Reserve expected to cut interest rates soon, there's a lot of speculation. Lower interest rates could definitely boost the housing market, which would be great for Opendoor's business model. Investors are eagerly watching for the Fed's decision and commentary, but even with these potential tailwinds, investors need to be ready for more ups and downs. So, what's next for Opendoor? It's a bold bet on new leadership, artificial intelligence, and a completely different way of doing business in real estate. The potential is there, but there are also the risks. It's a powerful reminder that in the market, things can change in a flash, and sometimes the biggest moves are driven by both solid strategy and sheer human belief. All right, that's the incredible story of Opendoor for today. What do you think about these radical changes and the future of housing? Let me know in the comments below. If you found this breakdown helpful and exciting, please hit that like button, subscribe for more content like this, and ring the bell so you don't miss our next video. See you next time.